morning. Welcome to Romora Talks episode 2. This morning, I'm going to talk about the spin-off of GoPay from GOTO. So recently, we heard that PT GOTO Indonesia will soon launch its new separate application or spin-off of the GoPay service. Thus, GoPay will be separated from its main application or GoTo. We know that this is only a spin-off in the form of an application, but what if GoPay is really spinning off from GoTo financially? Think of it like a parent company having a child. The parent company owns a part of the business that is a bit different from its main focus. So it's decided to let that part become its own separate company. This new company operates independently, but the shareholder of the parents often receive shares from this new entity. This allows the parent company and the new company to focus solely or closely on their specific business. So let's talk about it. What are the potential benefits or drawbacks of spinning off a mobile payment provider like GoPay from a larger e-commerce company like GoTo? So there are 4 benefits of spinning off GoPay from GoTo. First, increased focus. Separating GoPay from GoTo will allow each company to focus more intensively on their core businesses. GoTo can concentrate on improving and expanding its e-commerce platform, while GoPay can dedicate all of its resource to enhance its payment services. Second, better financial transparency. Post spin-off, GoPay can have its own separate financial statement. This would provide a clear picture of its performance and profitability, which could be obscured when consolidated with GoTo's financials. Third, potential for higher valuation. If GoPay has a high growth rate, it could command a higher price to earning ratio as a standalone company compared to being a part of a larger, potentially slower growing entity like GoTo. For example, if GoPay has a net income of $10 million and the average PE ratio for payment companies is 30, then its standalone valuation would be $300 million. If the PE ratio for a e-commerce company is only 20 and GoPay was part of GoTo, and therefore its valuation could be just 20 times 10 or 200 million. So that is some of the benefits of spinning off. And the last one is investor attraction. Spinning off, GoPay might attract a new type of investor who are specifically interested in the payment industry, but not so much in e-commerce. Okay, so to be balanced, let's also talk about 4 drawbacks of spinning off GoPay from GoTo. First, we can expect loss of synergies. GoPay and GoTo likely to have synergies already, such as shared customers and integrated service. After the spin-off, they might lose some of these synergies, which could potentially reduce their overall firm value. Second, increased operating cost. As a separate company, they might face higher costs due to the loss of economies of scale. For example, they may need to duplicate certain functions like HR, accounting, or IT. Third, potential disruption. The process of spinning off a company can be complex and time consuming, potentially causing disruption to both GoPay and GoTo's current operations. Fourth, and last but not least, is the risk of financial instability. If GoPay was reliant on GoTo for financial stability, it might struggle to maintain its operation post spin-off. For instance, if GoPay has a net loss of $5 million and was previously covered by GoTo's profit, it would need to find ways to cover this loss independently. Again, these are general pros and cons. The specific details would depend on GoTo and GoPay's individual financials, their market conditions, and various other factors. While we are still in it, let's talk about why spin-off can be attractive to investors. There are at least 5 reasons why spin-off are attractive for investors. First, business focus. Spin-off often enable a company to focus more on its core business. For instance, if a tech company has a retail division that spin off, the tech company can fully focus on the technology, while the retail company can fully focus on retail. This can make management more efficient and productive. Second, growth potential. A spin-off subsidiary could have significant growth potential. For example, if a large company decides to spin off a fast-moving and innovative technology division, that division could grow faster as an independent company than if it remained under the parent's company umbrella. Third, valuation. Sometimes the market might not fully understand or appreciate the value of different parts of company when they are combined into a single entity. By conducting a spin-off, a company can help investors to see the true value of each of its parts. Fourth, return to shareholders. In many cases, a spin-off involves distributing shares to the new company to the parent company's shareholders. This can be a way to return value to existing shareholders. Last but not least, again, we should think about investment opportunities. As an investors, owning shares in a company that perform a spin-off can provide new investment opportunities. For example, if you own shares in tech company that spin off its retail division, you suddenly have exposure to the retail industry as well. However, like all investment, there are risks involved. Performing adequate due diligence and research is crucial before investors decide to invest in a spin-off company. So that's all about that. What do you think, guys? Should GoPay spin off from GoTo? You have heard about the drawback and the benefits. Which one weigh heavier? Which one would you choose if you are the current GoTo shareholders? See you again in the next episode of Romora Talks. Bye bye.